Welcome back, Watchmen. Let's analyze. The ink is barely dry on the billion gold decree, yet the air in the kingdom has turned cold. Despite the treasures unsealed in the recent 10K scroll, the Vanguard has been met with a wall of steel and a heavy toll. Under the cover of darkness in the early morn, the first candle flickered with indecision, before finding upward momentum. A scouting party was repelled from the 78-cent line during the pre-dawn skirmish, retreating to the 75-cent fortifications of the SMA, as the morning's first light broke. A second attempt to breach 78 cents before the opening bell was cut down, and the gate swung wide with price at 78 cents, only to face a gruesome flush. By the time the morning panic ended, the collapse halted at 70 cents. The battle from there was punishing, as the 74-cent SMA switched its allegiance and repelled the bullish forces. This was followed by a bounce from just under 72 cents, as the late morning test commenced. As the midday sun was reaching its peak, a second rejection from the 74-cent line cemented the resistance. Minor bounces during the lunch hour and the afternoon retreat were met with rejections at 73 and 72 cents respectively. With the final hour approaching, a final rejection at 72 cents triggered a steady fade into the close. The battle ended as the sun set on the land, with price back at the 70-cent gate, leaving a bloody bearish Maribozu on the day's ledger. The 10K scroll confirmed the first profitable quarter in the history of the realm, yet the market answered the news with a heartless sell-off. The weekly hammer has been inverted, and the cost of the campaign has risen. The new era has begun with a heavy toll. Today, the company filed a $1 billion S3, a document creating a massive pre-approved financial war chest that gives the company the legal green light to raise capital, reset debt, or issue warrants over the next 3 years. While it is important to be direct, this filing definitely represents the capacity for future dilution. The context should alleviate concern rather than trigger it. You don't build a billion-dollar war chest unless you're moving towards major institutional-grade growth. While the more emotional retail traders see this and scream dilution, the data shows a company worth $115 million in working capital and $92 million in Bitcoin that is not diluting for survival, but rather preparing to use its stock as a high-value currency for expansion. This is not the desperation faucet of a struggling firm. It is the infrastructure of a scaling powerhouse, and we should accept the potential for future shares as the necessary fuel to reach the future. Now, in regards to retail sentiment, what we're witnessing today is a textbook case of desperation, and quite frankly, it's a perfect example of how to lose money. While the 10K provides the documented fortress in the Bitcoin and the working capital mentioned previously, the children are screaming about every penny that price drops, as if the company just filed for bankruptcy. They willfully ignore the $8 million in adjusted EBITDA and the Sign-Nayax merger because they are trapped in a loop of both loss aversion and recency bias. They see the red candles, and their immediate survival instinct overrides their ability to read the balance sheet. They cry manipulation into the skies to soothe their egos. But the only manipulation happening is in their own internal refusal to acknowledge the data. They're waiting for a savior to come along and tell them that everything is okay, while the actual filings we've seen prove the company has already saved itself. If you can't handle a fluctuation without a meltdown, you're not an investor. You're just providing liquidity that the professionals are harvesting. As for me and the Watchmen, we will stay focused on the facts as we leave the drama to those who would rather panic than be patient and profitable. Now, let's move to the Watchtower window and view the charts. Here on the weekly, it is definitely a sad sight. We have an inverted hammer that reached just to the dollar level at 99 cents and was rejected. Now, most of this, the rejection at 99 cents actually happened before the 10K. That was probably just psychological, like I said yesterday. And this is technically a bad sign for the future of the price action. But I can't help but think that something else is going to follow this S3. over the weekend or early in next week, and we're gonna see something happen very soon. Let's go ahead and dive a little deeper onto the daily chart. You can see this Marubozu. The Marubozu is a candle that doesn't have a wick in either direction. It does signify either intense selling pressure or buying pressure. Either way, if it's red, of course, it's selling pressure. But whoever's crying about this is really just not understanding that it could be a lot worse. The fall didn't even touch this 67-cent floor that we've been bouncing off of. And even if it did, it didn't come down to this demand zone here. We still have all of this stuff down below us to keep us secure. It's not the end of the world just because price drops a couple of cents. Everybody was sitting here waiting for the 10K to drop, expecting some kind of miracle, even though I tried to tell everybody, hey, it's probably not going to be perfect. It's probably not going to send us to the moon. People just, I guess they want to see what they want to see, and they ignore the data, the numbers, the facts. Our time is coming, and if you can't be patient about it, then you should. The proper thing to do would be to just close your position and move on if you really felt that way. But and that's, of course, like I put in my disclaimer, none of this is financial advice. It's not prudent to drag everyone along in your misery. They say misery loves company. It's just not. Just have a little bit of patience. Things are coming. This is the year of DVLT. Things are coming. Let's go ahead and dive a little deeper. I want to show this little area right here. This little supply zone that popped up. It's actually on the 5-minute, but we're going to zoom to the hourly first, so I can show you that we didn't even hit the low from the other day. 67. We hit the exact same low as the other day, 69 cents. And this is in after hours. So our actual trading hours, we didn't even go past, we would stop here at 70 cents. It's not that bad. Could have been a lot worse. And considering we saw a lot less volume than we have on the last couple of days, it's really just not that much to get worked up about. I know there's a lot of people out there that are going to hear this like, oh, AC, you're being an ass. Why are you being so rude? I don't see it as being rude. And I know that the loyal watchmen are not going to see that either. It's just the truth. You have to. Stocks go up and stocks go down, and they go up when you think they should go down, and they go down when you think they should go up. The 10K was a great report. It wasn't perfect, but it was a lot better than it could have been. And if we end up coming back down here to this demand zone down here, I feel very strongly that y'all will see what I'm talking about. Once it gets down here, this is a premium. People are gonna buy this up. Yes, we are under the SMA. We did bounce off of it a couple times on the way, trying to go back up. It blocked us down, but you really just it's not because there's manipulation going on, or it's just not. Now let's go ahead and let me zoom into the 5 minutes. I can show you guys this zone. Okay, this is what we would call a continuation zone. It happens in the middle of a downtrend or uptrend where price kind of pauses, consolidates for a second, and then resumes its momentum. we look here, we pull up the volume, we can see that these two candles were the highest volume of the day. And you see this green was low volume. It kind of just sat here for a minute, and then the volume picked back up and dropped. Now, this is retail volume. This is not institutional. 50 million volume is not an institutional day, but it was enough to cap the gains on the day. And this is more than likely was like quant traders and algorithms. If you were watching, if you have time and sales on your broker and you watch, you can see a lot of transactions going on with 5 decimal places, some of them with 6 decimal places. Those are not humans trading. That's algorithms doing that. And since price fell below this line, they're programmed to do that. It's a computer program. There's no emotion in it. They just execute. So I expect that if we do retest this zone with any significant volume, it's going to crumble, and we will regain this SMA. Now, let's go ahead and back out, because it's Friday, and we're going to honor the candle of the week. And this week's candle is this guy way up here at the top, the one that reached 99 cents. He was definitely not prepared for the selling pressure that he met up there, but it's the closest that we've come to $1 in quite some time, and I'm very proud of his action here at the top of the chart. Hooray to you, Mr. Candle. Okay, now with that, we can go ahead and close out, because I've been rambling on, and I kind of lost my patience with a lot of the retail traders in the community. I've been talking a little bit too much, so we'll go ahead and close out. But remember, tomorrow I will stay tuned, because I'm going to do the Guardians of the Earth and Sky. I'll teach you guys exactly how these supply and demand zones are formed, and how we can use them for entries and exits, and the best places and how to draw them, and where to draw them, and when to draw them. And then I'll set up another poll, and we'll figure out what we're going to do for the next class. Alright, that being said, we can go ahead and smash that like button and ring the closing bell. And until the end of all things, the Night Watch stands.